Hi everyone, thank you so much for joining another LeadSquared webinar. A very happy new year to everyone who's joined in, and welcome back to our regular webinar community there. So, thank you so much again for joining. Today's session is all about lending. We want to help you scale your digital lending business, really transforming borrower journeys in 2024. So I have an excellent panel with me. As you can see, I have Parth and Vineet with me. Quick one-line introductions for the speakers before I hand it over to them. So we have Parth Pande, who is a co-founder of Finance Buddha. So this is actually his second webinar with us. We were just discussing that we did one a few years ago. So Parth himself, after spending 8 years at Citibank, he co-founded Finance Buddha in 2012. And Finance Buddha is a leading fintech for personal loans, home loans, and business loans. To accompany him, we have Vineet Tiwari, who is the AVP of South Sales at LeadSquared. So he is a seasoned sales professional and has been with LeadSquared for, I think, over 8 years now. Vineet, correct me if I'm wrong.
Yes, approximately 8 years.
Awesome. So, great. We have Parth and Vineet. A quick note on what we will cover. We will, of course, discuss the current industry trends, developments. What are some of the industry challenges when it comes to ensuring a good borrower experience? And what are some of the tools and technology solutions out there to really transform this experience? While Parth returns, I see that he's just stepped away for a second. Let me just quickly leave a note for the audience here today. Feel free to share your questions, comments, anything that comes to your mind. We're happy to discuss and take it ahead, even if it's off topic, but not too off topic, hopefully. And we will give time for any of your questions. We will address them towards the end of the session, and also this recording will be shared. So, Parth, we can't see you, but can you hear us?
Yeah, I can hear you very well. Thanks.
Okay, sure. I don't know if you've turned off your video, or is it just my system?
I haven't turned off my system, but maybe the internet connectivity is a little poor.
Okay.
Because of that, yeah.
All right then. Vineet, I'll hand it over to you now. Please take it away.
Thanks a lot, Shivani. Hello, everyone. Welcome to this lending webinar, and I hope we all will learn a lot of stuff from Parth. So Parth is in kind of industry stalwart. So Parth, I will start. I mean, thanks a lot for first of all for joining this webinar, and I will start with a very specific question related to the experience of the borrowers. So in this industry, since you have been in this industry from last, say, 20, 28 years, and these 2 decades had seen like a lot of changes. So what are some of the biggest challenges that you see which should be tackled to improve the borrower experience in the lending industry today?
Yeah, first of all, thanks, Vineet. Thanks, Shivani, for, a very sort of a kind introduction, calling me a stalwart and all. So first of all, thanks for that. You guys are too kind. So I'll just quickly sort of, start by introducing myself while I think you guys have spent some time. I think just a quick introduction so that, the context is set. So I spent 2 decades in this industry. I started out my career with Citi, where I was part of the original consumer lending team, which was set up in the early 2000s. Did variety of roles at Citibank. Notably, I used to head the product function for Citi India for the consumer lending business in the mid 2000s. And post my Citi experience, I started Finance Buddha along with my co-founders. Finance Buddha is largely an origination-based fintech, primarily focused on personal loans, business loans, and mortgages. Personal loans is our primary product. And we have a hybrid customer acquisition strategy where we acquire customers in the physical world through agents and sub-brokers and DSAs. And we acquire customers digitally, primarily through our digital engine. So that's typically what my background is. On the platform today, we have serviced over 20 million borrowers. We have partnerships with over 100 plus lenders. And on the overall customer, on the origination side, we originate over 1,000 crores of loans every month. Or rather, we disburse over 1,000 crores of loans every month. So that's the context. I think coming specifically to your question, Vineet, I think what's important for, at least from my perspective, to think about is, I think lending as a business primarily is important to think about it from a perspective of, like, friction is not bad in this industry, right? In a lot of other businesses, I think the entire experience digitally is to remove friction into the customer experience perspective. I think, see, the business of lending, it's about origination, but I think it's also more importantly about, portfolio management, end-to-end risk management. So I think the context here is that the digital transformation has to be looked at from an entirety perspective. I think it can't only be looked at it from an origination standpoint. I think the regulators themselves have made a lot of processes very easy. I think KYC is far easier now than what it used to be maybe 2 decades back. A lot of the other, industry regulations are, aligned towards being a lot more digital friendly. But at the end of the day, I think there are two questions that, there are 2 points that every individual who's working in this industry has to appreciate. That A, it's a regulated industry, right? So anything which is regulated will come with its own set of rules and regulations, and I think that is for the benefit of everybody who's operating in the space, right? Secondly, friction is good in this industry, in the sense that what I'm trying to say is that it just gives you more time to make a better decision, right? Because at the end of the day, we haven't reached the level of data quality that probably the Western markets have, where everything could be automated and all decisions could be data backed, right? And today, when you are underwriting loans of whatever sizes, there could be some leeway where you don't have 100% conviction on data, right? So I think the digital transformation has to be looked at it from an end-to-end perspective, broken down into what transformation can be done in the origination journey, what could be done on the risk management side, what could be done from a post approval, collections, and customer sort of lifecycle management perspective, and also what could be done from a customer servicing perspective, right? So I think digital transformation is happening across the board, but I think a lot of times I think it kind of gets limited towards thinking about it only from a point of view of origination or risk management. I think it has to be looked at it from an entirety perspective. But yeah, I think at a high level, I think technology is an enabler in this business. It is not the business by entirety. But yes, at the same point of time, I think various kinds of transformations are underway. But at the same point of time, I think it has to be looked at from an end-to-end totality standpoint, rather than from a sort of a standalone standpoint. So that would be my view on the digital transformation as far as this industry is concerned.
Sure, Parth. Thanks a lot. I mean, this kind of like enlighten our thoughts also. And you can see that
a little contrarian sort of an answer to saying that everything is going to become digital and we are going to change the world. I think it's important to also look at it from a balanced standpoint.
Correct. True. 100% agreed on that. So Parth, I'll just, so my second question will be apart from here, where, I will use some of the keywords that you took now. I mean, you picked up. Say, I mean, acquisition of a customer or the new onboarding, then eKYC, underwriting, LOS, etc.
Right.
Now, if you could help us understand, that for a lender, how a lender can use, like technology to ensure or to make the process faster, easier, and transparent.
Yes.
And the perspective could be, all these 3 or 4 different processes that we have in lending as an industry.
I think it's important to kind of break down this question into the different facets of a lending journey, right? Mm-hmm. So essentially, if you ask me, I think I would want to break down this discussion into the origination piece, which is basically where you sort of get the top of the funnel or to originate the customer, right? The critical piece of risk management, which is essentially to say that who are you going to give credit to and who you're not going to give credit to, right? Which is a very critical element to sort of the third is the entire sort of, once you've decided who you want to give credit to, like the entire operations journey, right? Which includes things like KYC, which includes things like customer servicing, which includes like the entire sort of the NACH process, the sort of the registration, mandate registrations, or all of that, the payment related sort of processes, getting the money disbursed into the customer's account. And the fourth, the most important element is once you have onboarded the customer and the customer is kind of you're now sort of interacting with you, how do you manage your portfolios, right? Because essentially this is a portfolio management business. You are projecting future risk by underwriting it today, right? Essentially that is what you're doing in this business, right? So you want to be sure that, hey, Vineet or Parth or somebody else is going to pay up 3 years later, right? Or continue to pay for the entirety of the loan, right? Because that's when, because in lending, all your costs are upfront, right? Your origination cost is upfront, your underwriting costs are upfront, and your earning is over the life of the loan, right? So essentially, it's a negative sort of, you are sort of not in the money in the first day, right? So you have to ensure that your portfolio performs in a particular way. That's when you kind of make the business model viable. So I think if I was to touch about origination, I think origination is the first element of business which has become digital, because customers are looking for credit products on digital platforms, right? Which I think is the easiest part of, in my opinion, the automation of the digitalized journey is concerned, right? Today, various elements are coming through, like every fintech wants to be an origination fintech, right? Or every platform today which has a customer sort of facing engine wants to be a loan originator, because essentially customers are interested in discovering credit products. At the end of the day, I think we are also transitioning from a savings based economy to more a credit led economy, right? So I think at a very macro level, that's what is happening, where today everything is pretty much available on credit. When I started my career, like a lot of people are not interested in taking loans because they thought that taking loans was a bad thing, right? Essentially, it was looked down by the community, right? We had to go out and actually convince people that, credit is essentially helping you grow your business or helping you grow, whatever your lifestyle. A lot of the customers didn't see it that way 20 years back, right? Today, customers are credit first, and look at the younger audience. They are essentially getting used to getting access to credit products pretty early on in their lives, right? So I think as far as the first element of origination is concerned, I think 100% of that origination makes sense, whether now you have a B2B2C led model or a B2C led model or an embedded led sort of an approach where you kind of originate on one platform and disburse on another platform, or you could essentially target borrowers on and today that's the reason why Flipkart is giving loans, Amazon is giving loans, Google is giving loans, right? So pretty much anybody and everybody wants to be an origination side fintech. So I think that, in my opinion, is the easier part to solve, right? While that's my business and I'm getting sort of, we are competing with these guys, but I would still believe that that's the easier part of this business, right? And there, I think the digital intervention there is fairly straightforward. I think it's more around getting more traffic, getting visibility for your products, and getting more and more people to see the merit in applying through you, right? It's a very competitive space, but it's fairly straightforward in the sense that because you essentially are opening a form for the customer and getting him to sort of collect some information, and then in the back end figuring out whether the customer should go to which lender and who should sort of approve or reject the loan. So I think the first part is easy. I think the biggest sort of technology intervention is in the second part, which is the risk management or the risk assessment part, right? Which is essentially to decide who's a creditworthy borrower, right? And today, unfortunately, we don't have enough data in the ecosystem. Like, while there is far more data today than what it was maybe a decade back or longer, the bureaus are more robust, various other forms of data is available. But at the end of the day, from a credit manager or a credit origin or a sort of a credit profiler standpoint, what's important is to understand whether I understand the borrower enough, right? And is the data that is flowing through various sort of flows, is it enough for me to decide positively on the sort of the customer being sort of creditworthy, right? And see, unfortunately, if you look at the Western markets, right, and I had some experience in working in Japan when I was a city, right, also. See, there the bureau data is pretty much the only way of originating loans, right? Because the bureau data is so robust, right? Because when they are talking about bureau data, it's not only bureau data, right? Bureau data also has access to your utility data, for example. So they know that whether you pay your electricity bill or not, what is the quantum of electricity bill. They have access to public utility data. They have access to a variety of social security data, right? So essentially, the bureau models are far more robust in the West because the data points that are flowing in are far more wide and sort of give you a better perspective on underwriting an individual. Today, our credit bureaus are largely giving you asset performance data, right? They're not giving you anything beyond that. Now, with a significant part of the Indian population either not on the bureau or being very thin on the bureau, essentially you can't rely only on bureau, right? So then you have to start looking for alternate parameters, right? Now, the alternate parameters could be various kind of device level data that could flow in through various kind of technology interventions that you can do. However, there are two challenges there, right? One challenge is that on the privacy, once you bring in the sort of the privacy angle, it limits your ability to sort of get a lot of data through various means from the customer. Secondly, also, is the data enough, right? So essentially, if I have 200 contacts on my phone, does it really give me any insight on underwriting you, for example, right? So essentially, having a lot of data is not necessarily the input to making a better credit decision. I think having the right data is the important element to it, right? So I think on that, a lot more intervention of technology, data analytics is critical. And I think there, the ability to sort of being able to view multiple data inputs on one platform, for example, being able to build more robust data models which are flowing through various data inputs or various technology inputs is a very, very sort of an important element to the business. So I think here I would think that the role sort of technology interventions can play from a overall life cycle management perspective is far higher, right? And various kind of platforms can help you make a better credit decision, and essentially investing time, energy and resources behind that is critical if you want to have a long-term sort of a strategy on remaining profitable in the lending space, right? I think customer service, KYC, all of that has now moved digital, right? So essentially there are various platforms available which can help you sort of make that experience digital for the customer. I think and customer is also looking for digital service. Now nobody wants to call a call center and ask them ki mera amortization schedule kya hai, right? You can essentially check it out on any lending app or any kind of a digital based sort of a service experience. As far as the portfolio management is concerned, again, it's kind of linked to the second point that I made, which is about risk management. Essentially, you have to keep having interventions with the customer, right? That's when you realize that, hey, is this a good guy you want to give more credit to, a bad guy you want to stop credit to, right? A guy on the margin you want to monitor credit. So that's essentially the philosophy, right? So I would think that the role of technology is very large, and the role of technology has grown in this space. However, from a perspective of if I had a limited, so if I wanted to do the end-to-end business and I had limited resources, where would I spend more dollars than less? I would think in the risk management and on the portfolio management side is where I would at least invest more money on.
Sure, perfect. Thanks, Parth. Now, so one is the digital like journey from a borrower experience point. Second is basically if we are building efficiency in these processes through technology, right? I mean, these are the two aspects. Now, in the second part where we have to kind of invoke, say, efficiency and build it's like whatever operational efficiency that we have today to streamline the entire, say, borrowing process or this lending process.
Right.
So what's your take, that how automation, you can give some examples as it,
right,
how automation can help in terms of, A, making it streamlined, B, also kind of, improving the efficiency in the whole ecosystem, in the whole process.
Sure. I think our entire experience with LeadSquared is built on automation, right? So I think our relationship with LeadSquared is built on this particular aspect itself, right? Mm-hmm. So I'll try to give you our experience, and I think that will probably be able to, hopefully that will answer part of the question. Sure. That you had, right? Sure. So essentially when we were building sort of our digital lending business, right? The question that we had is that we had a lot of borrowers, right? And a lot of potential lenders, right? So essentially we kind of are adding the middle layer where we are saying that, hey, we are going to match the lender to the most, the most fit lender for that particular set of borrower. Now, essentially, in reality, this is not a one-to-one experience, right? It's not that Vineet ka liye ek hi lender in the market, right? So it's essentially there are a pool of lenders that Vineet will fit into, right? So the first element of this is really being able to capture all the inputs about Vineet that I can gather at the time of application, right? So essentially when Vineet comes and shows intent on my platform, right? How do I first, at step point one, how do I collect all the possible information about Vineet that I can to make that decision, right? Now, that requires me to have because standalone Vineet is only disclosing so much, right? So in the back end, I need to have all the necessary integrations that are required for me to understand Vineet better. And obviously take Vineet's consent in that process to say that, hey, Vineet, I'm also going to access this data about you, right? So essentially, that's the first part, right? Of essentially where does sort of, and I'll come to the automation part here as well, right? The second part is where really the secret sauce is, right? Which is understanding कि यार Vineet के लिए ये 4 lender more opportune होने चाहिए, right? Now in that process, and this is the first level of automation comes in, is that we would internally have a scoring system, right? We will essentially say यार Vineet के लिए 4 loan lenders सही हैं, और इसमें within that 4 this is the priority order, right? So again I'll have to build, and I will say that if, for example, Vineet is of a particular profile and this is the most opportune lender for him, then you automatically send Vineet's application to lender 1, right? And if the response, so it's like a red green signal, right? So essentially when you are sending this application of Vineet to say lender 1 will give you either a red signal or a green signal, right? Now if the signal is green, then you would again have an automation process of telling Vineet to tell him कि यार Vineet, अच्छा आपको prima facie ये loan मिल सकता है from lender 1, but you will have to complete XYZ steps, right? So again, the role of automation becomes very critical, because if you were to do this manually, you will have to have a very, very large call center or a very, very large sort of a sales team to be able to do all these steps. And the customer experience will also be faulty because you'll not be able to do this real time, right? So that's the first element, right? Secondly, if the response is red, for example, right, then I would again want to create an automation to say that, hey, Vineet, if lender 1 is no, lender 2 is the second thing, right? So that's where again the automation element comes in, right? So if you want to do more with the same borrower, you have to go down the automation route, right? That's the first thing. Now let us assume that Vineet has gone to lender 1 and has got funded, right? Now, if I want to make more money on Vineet, right? Essentially, I have to cross-sell Vineet something else, right? Which is essentially to say, यार Vineet आप बहुत अच्छे loan के customer हो, by the way, एक line of credit भी आप ले सकते हो, right? Hypothetically, that again is an automation-based journey, because today Vineet is expecting a digital experience first of all, right? So Vineet also wants to consume more products, but he doesn't want to have this somebody calling him and saying, "यार Vineet आप एक और loan ले लो या एक और card ले लो," right? So all of that again can be built on a very, very strong automation front, right? So I've just taken one example, but the point I'm trying to make is that when you have like millions of borrowers at the top of the funnel, right? It is virtually impossible for you to run any ops model based on capacity, because if the top of the funnel is very large. And today what is happening in at least the credit ecosystem is that because credit is kind of exploding and the need for credit is kind of inherent in customers, sort of mindset or psyche, many people end up applying at multiple places, right? So essentially the same borrower would be applying on different aggregator platforms, the same borrower would be applying on bank platforms, the same borrower would also now go to embedded platforms, right? So essentially if you're not able to design a very lucid flow for the customer, and you are not able to build a good customer experience, the chances are that the customer will take the product from a platform which he thinks is better than yours, right? And a lot of that better is essentially activities that can be done through an automation system, right? So I think automation is, besides the standard answer is cost benefit and all of that. I'm assuming everybody is kind of aware of that. But what I'm trying to get at is just from a scale management perspective also, right? It is impossible to build a large business without automation in today's day and age. Not necessarily only from a cost perspective. Of course, cost ka benefit to hai. But I think more than that, just to manage that experience to the customer. And also, actually, what happens today is we need that if something becomes a industry standard, right? Then if you're not doing it, then you are anyway going to get left out. So the customer is also expecting that particular experience. And if you're not build those automation queues or you've not built those flows out for the customer, then essentially the customer will think that yahan pe something is lacking, I get a better experience somewhere else, right? So essentially automation from a long answer to your short question is automation, and building those automation queues are very sort of important, and investing in good platforms, good technology systems which can help and enable sales automations or customer service automations is paramount in today's day and age. I mean, I don't think there is any choice left to not invest in one.
Absolutely. And I'm sure that the audience would also have kind of learn from your experience in terms of automation, or building these processes using automation flows, workflows, etc. Now, you touch base upon like one line on the cross sell of products.
Right.
Since we have like all the audience from the similar industry, and everybody would be happy to learn if there are any like best practices in this industry, especially in lending, to align the cross selling with the customers, say financial goals or aspirations, and if technology can also be enabler into kind of mapping that, Yeah, if you could share that experience or your learning.
So I can give you a data analytics led answer to this question, right? And I can give you a practical answer to this question, right? Let me first give you the data analytics, and I'll give you the caveats also, because I think it's important to now start thinking about cross sell from a new DPAP Act point of view, right? Essentially, the new digital protection bill that is sort of on the anvil, or will change the dynamics of how cross sell are done completely, right? Because the consent mechanism is going to change from what it is today to what it will be in the future. I mean, a lot of the answers are still not very clear. I mean, I don't think anybody has those answers, because some of these are still getting formulated, the policies, while the broad framework has been presented and the bill has been passed, but specific questions still remain. But I think coming back to at a very fundamental level, right? So like I'm coming from a cross-sell as a philosophy standpoint, right? Essentially, is that, see, what is today happening is, because the competition is very, very high in this particular industry, right? And every fintech or every platform today wants to be sort of a lending origination fintech, right? Your cost of origination on the customer is only going to go up, right? And essentially, if you are someone who doesn't have a natural access to a very large pool of customers, right, automatically your costs are going to be very higher than compared to somebody who's already on Google, for example, right? Google ke liye incremental cost is nothing, because the guy is already on Google, for example, right? So now the question is, if you want to run this business profitably, and if you can't make money in a lending business, then which business will you make money in, right? Essentially, ये तो साहूकारी वाला business है, right? इस business में भी आप पैसे नहीं बनाओगे, तो फिर आप किस business में पैसा बनाओगे? So essentially, I think the key piece is that if your origination costs are going to go up, right? The only way for you to remain profitable in the long run is essentially to be able to build a very robust cross-sell engine. So I think at a fundamental level, it makes business sense to build cross-sell, right? Now, the data analytics answer to this is, essentially, you can build a next best product kind of a model, right? Which is essentially understanding the customer and building a life cycle model for it, right? Over anybody's life cycle, for example, at various points in your life, you will take various different kinds of credit products, right? Or different kind of financial products, right? So for example, when you're starting out in your career, you'll probably take a credit card, and then you will graduate to a two-wheeler loan, and then you will graduate to a personal loan, and then maybe a four-wheeler, and then a housing loan, right? And then maybe wealth products or insurance products, etc. So that's the life cycle pretty much at a customer level, right? Now the understanding has to be built from a really understanding the customer standpoint, right? So essentially, at various different customers will want different things at different points of time in your life, right? So essentially, for you to build that, you can build NBP products, which is NBP models, which is basically next best product models, where you essentially say that, hey, over a lifetime, what are the potential products that Vineet will consume? At what points of time will Vineet consume these products? And within the products that are available with me, what are the best products that I can push to Vineet, right? And then find out. So at least that is at least from an analytics perspective, you can build a model which can tell you that these are the potential customers who can consume these kind of products, right? But at the end of the day, model will only be an indicator, right? And now the important thing is that Vineet also knows this, right? It's not that Vineet is not aware of this or Parth is not aware of this. Usko bhi pata hai ki mere ko loan lena chahiye. So then why does he choose you over something else, right? Or somebody else for that matter. So essentially, a lot of this can be solved through being able to give an insight to the customer, which he or she it's not a natural instinct to them. So I'll give you a perspective, right? Today, everybody goes and spends on the credit card, right? Now the entire loyalty and the reward point structure that is built on a credit card, for example, and there are various credit cards and various sort of credit cards which have different structures, right, is essentially built from a perspective of retaining the clients or giving some benefit to the customer to use that product, right? But a lot of the times customers are not aware of how to use that point. I've seen many customers, and I used to see that at Citi very often, is that a lot of the people accrue these points and don't use them, right? Or they are not able to extract the maximum benefit out of the card, for example, right? Now today, if I as an independent person can tell the consumer that, hey, you can potentially get these extra benefits, right? Because you are anyway spending on fuel. Why are you not spending it on a fuel card? You will get much better rewards if you're spending on a fuel card vis-a-vis, because the entire IOC card is built from a perspective of building loyalty with IOC, right? So essentially, आप fuel पे खर्च कर ही रहे हो. Instead of going and swiping your generic card, you might as well use your IOC card. You will get a better value proposition, right? Because it's built from that standpoint, right? So essentially, the point I'm trying to make is that if I'm able to give this insight to the consumer, then cross-sell becomes easy, right? Because it becomes a natural instinct to the customer and say, यार fuel पे तो खर्च करते ही हो, IOC के petrol pump भी जाते होगे, ये card पे खर्च किया करो ना. Why are you spending it on generic card, right? And today I have enough data to figure out that what are the kind of cards that Vineet has, and maybe he doesn't have an IOC card, for example, right? So the cross-sell becomes easy. Or in a declining interest rate regime, getting the customer to switch their home loans is it's a no-brainer, but customers don't get it, right? I mean, I don't mean that they don't get it intellectually, but they just need that push or somebody to kind of quantify that benefit to them. I think the big opportunity that at least I see today on cross-sell is quantification of the benefit, right? The benefit is there, wo to customer bhi samajhta hai, right? But nobody is able to quantify that benefit for the customer. Once you quantify that and say that, hey, by switching this home loan, you will save $800 a month and $10,000 a year, then that quantification resonates with the customer, because he thinks, yeah, without making that effort, if I'm able to spend $10,000 a year, what's wrong with it, right? So their cross-sell becomes easy. So people who are successful in cross-sell, so there are two ways of doing cross-sell, right? There is a typical bank way of doing cross-sell, which is a force cross-sell, which is to say, yaar, aap hamare customer, aapko ye lena padega, right? Or you can be customer-centric and say that, hey, I'm going to give insights to the customer, which will help him in he or she in his, way in which he lives his life, right? If you are able to give that insight, I think cross-sell that's the way to do cross-sell. And for that, you need to build that product understanding, that customer persona understanding, and being able to marry the two. And say, yaar, is type of customers ko agar main ye insight dunga, so he or she will respond positively to my cross-sell message, right? So I think that is from a philosophy perspective of how to go about it. I think it's going to become, I think the consent mechanism in India is going to change drastically once the new DPAP Act comes into being. And I think a lot of the cross-selling will now have to be explicit instead of being implicit, right? So you will have to take those cross-sell consents right at the outset. So you have to also then build a vision for how cross-sell should be done. That's not that, today I think cross-sell can also be done as a add-on activity, right? I think maybe a lot of people think about it saying that, chalo theek hai, we'll dabble and see if this works for us, right? I think now you will have to think right at the outset of what your cross-sell philosophy is like, what your vision on cross-sell is, and be able to build those right at the outset and being able to tell that to the customer at the outset, because that's how the act is kind of designed, right? And if we are not doing that, then we'll get left out because somebody is going to do it, right? And in a way, if you have not done it, you will it is also the people who kind of think about that and are able to build, show the reason to the customer. Maybe now each platform will have to think about building loyalty programs or whatever, so that the customer is willing to give you the consent, right? So, see, at the end of the day, customers are also human beings like you and me. They also need incentive to give you something, right? So essentially, we also have to show them the reason why you are taking this consent and what are the benefits that you can accrue. So it will be a combination of being able to design better journeys, being able to capture better data, being able to show the customer better content, and at the same point of time, also show those reasons, for example, right at the outset, so that he is able to give you the consent at the top itself, rather than then trying to reach out, because वो difficult हो जाएगा. आज कितने possible है, we can still go back and send him a push message on something that we didn't take consent for at the outset, but I think it's going to become difficult. So I think it's important to really think about it deeply. And I think cross-sell has to become part of the philosophy of any company. That's the only way to be profitable. I think otherwise, given the amount of competition that exists in this space, it is impossible to run a profitable franchise for too long.
Thanks a lot, Parth, for explaining the cross-sell philosophy so well. And audience, if your thumbs up will be a validation that our discussion is going in the right direction. So yeah, thanks a lot for this. Okay, and in the meantime, so I think 2 polls has been run. So Shibani, if you want to take up a few seconds to, for these polls as well, would you want to?
Yes, thank you so much for the pause, Vineet. There are polls out there to everyone who has joined. Please feel free to respond, because we really want your feedback here. I also have questions piling up, so whenever you want to take a break, Vineet, I'm happy to ask them right away.
Shivani, only Vineet is allowed a break?
No, not at all. Yeah, there are quite a few questions piling up, so that clearly shows that this has been a great discussion so far.
No, we can take the questions. I think the the objective is to try to answer as many questions of the people who are participating, right?
Sure. Yeah.
And
I mean,
their
Shivani,
questions, I think that I would sort of prefer that. Some of the other and there also otherwise Vineet बोलेगा सारे आपको पहले से question पता है तो आपने anyway answer prepare करके रखे हैं.
no, of course. I mean, okay, Shivani, we can go ahead with some of the questions now.
Yes, so I'll take up some of the live questions that have come in, and
Sure.
while you answer those, I'll pick up the earlier ones that came in. So Shiva says, "Hello, Parth. Great insights. What's your take on new to credit customers? How can REs collaborate with fintechs to acquire these NTC customers?" And I'm just going to post that up.
Yeah. So honestly, it's the holy grail, if you ask me. The NTC, I think a lot of discussions. I think we have been discussing this for a while in the industry. The NTC piece, because essentially India has a very, very large population which is joining the workforce pretty much on an annual basis. Right? We are a very populous country and a very young country, right? So essentially, there will always be new people who have never availed credit products, who will be coming into the sort of the ecosystem, right? So NTC is a real opportunity, if you ask me, right? To be very honest, the problem with NTC is that today a lot of the REs, while on the face of it, they want to be part of solving the NTC problem. But in reality, if you go and ask the senior management of any sort of a RE or reputed RE for that matter, it is a very small portion of their overall portfolio, right? So they would kind of be able to take maybe some exposure to it, but they would not be keen on taking very large exposures to it. So it's definitely a challenge. So from an opportunity perspective, the opportunity is very large. But from a practical perspective, the challenge is really being able to convince the supply. So the demand is there. I think that is well known. I don't think that there's any sort of question on the NTC piece on that, right? I think the question is really being able to convince the supplier that this is a good business to be in, right? And over a period of time, I think what is important, and I think what is lacking today, if you ask me, is really being able to educate the customer that why good credit performance is unlocking value for you in the future, right? I think if I was to kind of solve the NTC piece, right, I would solve it that way, right? Because essentially when you push credit to somebody who's never taken credit before, right, his behavior is not certain, right? And a lot of the times NTC portfolios perform very poorly because of that, right? I think if you have to build a strong, robust NTC portfolio, you have to also build a very strong customer education program along with that, where you have to tell the customer that, hey, I'm giving you a short-term, small-ticket loan today and helping you come being part of the mainstream, right? Now, you don't screw up on this loan because this will otherwise set you back, right? What today is lacking today in the fintech ecosystem, if you ask me very honestly, is that customer education program, right? People want to do NTC, I think that is established. Demand is there, that is established. Various ways of getting NTC is established. I think वो सारी चीजें established हो चुकी हैं, right? What is missing is giving the customer, that education that why you should behave in a particular way and what are the benefits that you will get as a consumer, right? If you, continue to do well on these loans and once you get scored, you will get better loans or whatever, right? I think that element is where I would focus on. And I think if somebody was to come to a, large RE or a, sort of a well-meaning RE with that insight that, hey, I've been able to educate 10,000 people on the benefits of credit, and these out of these 10,000 people, 9,999 are performing well, then I think it's a slam dunk. I think that is missing in the ecosystem. I would say that would be one of my insights to help build a strong, robust sort of an NTC based portfolio.
Okay, Shiva, I'll pause on your next question and quickly move to Sunil's question before picking that up. So Sunil says, "Hi Parth, with regards to credit risk assessment, there may occur a need for credit manager to have a face-to-face with the customer. Today, it is in nascent stage. How do we achieve a balance between the traditional and tech, or we still need the traditional method?"
So again, my point of view on this is very credit first approach. I think on consumer lending, you can go with so if you're underwriting consumer and if you're underwriting a business, I would answer these questions completely differently. If I'm underwriting consumer, I would think just go with a video platform, because essentially there is no merit in meeting him individually. There is nothing new that you will get to know about him that you would not get from data, because consumer essentially what you need to know is what is his income? Is his income, whether his income is what he's claiming his income to be, and you know, and broadly getting the comfort of saying that, hey, he's not somebody who has bad intentions. Right? Essentially, that is what you are trying to establish on consumer. And you have various kinds of information that comes in from bureau or banking or whatever that will help you make that decision, right? So I think they're using technology as a mechanism, and that's one of the reasons why even the RBI is pushing for video KYC and all of that, right? Essentially, where you're saying that, hey, you don't need to meet every borrower, you can make the same quality of decision basis data, and if required, an additional video input, right? So I think that on the consumer side, I would kind of say that investing in potentially some kind of a video experience for the customer and using that from a credit input perspective is satisfactory. If it is a business loan, and if it's a business loan above a particular quantum, I would rather go to the extent of saying that you should 100% meet the business, right? Because see, what happens today, especially, is unless you're in the business of selling on a e-commerce platform or something of that sort, where a lot of the data can be made available. But if you're today running a chemist shop, for example, right? I mean, what credit assessment of that borrower can you really do on a video call, right? I mean, essentially, at a point of time. So if you are going and spending and you understand the kind of inventory that he's carrying, you are able to understand what kind of systems that he really have, what kind of investment that he has in his business, right? Some of this is made available obviously on document, but it makes sense to have the touch and feel, especially if you're underwriting a loan which is said greater than 10 lakhs or something on a business loan, right? So if it is greater than 10 lakhs, my suggestion would be that if possible, of course, there are certain times it is not possible to make that intervention, but if possible, make that intervention. And see, what I believe is that the reason why even large banks today, right? See, large banks have a lot of things going against them, but one thing that they're going for them is their ability to underwrite credit, right? I mean, that we have to give it to them. The fact that HDFC Bank or an ICICI Bank are around for 30 years is that they know how to underwrite, right? So even today, for example, if you're doing a business loan from HDFC Bank or you're taking a business loan from HDFC Bank will insist that somebody comes and meets you. It's not that they think that they can do anything better, but you get a very strong, see, at the end of the day, of course, at some point of time, maybe our AI will become so strong that, looking at my face, you can check my intent, but we are not there yet, right? But once you meet a business guy on his business premises, right, you get a different kind of a comfort, right? आप मेरे ऑफिस में आओगे और देखोगे कि क्या कितने लोग हैं, कितनी business activity चल रही है, आपको automatically comfort create हो जाएगा, right? So I would think that if you are consumer first, please go for as much technology intervention as possible. If you're business first, while have a technology first approach, but if you want to have a sustainable portfolio, meet the customer or understand the customer, spend some time with the customer, and also it will give you an opportunity of making various kinds of cross-selling, that automatically comes in because now you met the customer.
Absolutely. Now, my next question is for Vineet. It's from Mahesh. Mahesh says, how can LeadSquared solution help in agent distribution model? What are some of the pros and what are some of the limitations of the solution?
I think they're building an agent distribution platform for us. So I think you can take a demo from Vineet separately.
Yeah.
So I think that as we speak, that is something that's a pilot that we are doing. We are building we are calling it a digital alliance partner business. I think LeadSquared is building that platform for us. So if you are really interested, Vineet, your sales guys can probably do a demo. I think the product is already ready. The first version of the product is ready. So right from the agent onboarding to the agent payout, I think that entire sort of them referring and them being able to sort of refer more clients, being able to view their responses on the fly, view our responses on the fly, all of that is already built out. So I think Vineet, great sales opportunity for you.
Yeah. So Mahesh, I think we can connect offline and I can run through a demonstration of the product we have built for specifically to cater to this use case. So, yeah.
Awesome. Okay, more questions. Okay, I'm just going to continue with the questions until you all tell me to stop. So this is from, okay, I'll go back to Shiva's question again. Shiva says, great point. He's referring to something you said earlier, Parth. Great point on privacy and your insights on the DPDP bill. Also, if you can shed some light on consent management of data.
I mean, honestly, I would think that I mean, see, this is a I mean, I wish I could, have a robust answer to this question, because we are also figuring this out, right? We have taken opinions of variety of legal firms, and I think there is no consistency at this point of time, even within the legal fraternity, in terms of what is the overall view on the DPAP bill, right? So essentially, the DPAP bill. So I'll tell you where the biggest question mark is, and I wish maybe if somebody has a better sort of a view on this, then maybe I do. I think I would love to sort of hear that out. Is, see, there are two parts to the DPAP Act, which is which needs to solve for. So one is the consent mechanism for anybody who's coming in from the date of implementation of the DPAP bill, right? So I think wahan pe clarity hai, in the sense of the sort of the clear outline has been laid to say that you will have to take a specific kind of a consent. So your terms and conditions that you are showing to the customer has to be very specific. You have to be very sure about what you are using the data for. You have to tell this to the customer upfront. And if you are going to use this data for any other purpose, you have to inform the customer upfront, and it can only be utilized if the customer has given you an explicit consent. It can't be an implicit consent, right? So essentially, the differences between explicit and implicit, even today, for example, a lot of the consent framework is in place, but a lot of the consent framework is implicit in nature, right? It is not explicit in nature. So it is not. It is like saying that I'm collecting and telling Vineet that, hey, I will give you products in the future. That's an implicit consent. Vis-a-vis telling Vineet that, hey, I'm going to give you a life insurance product in the future. That is an explicit consent, right? And if Vineet says that, hey, I don't want a life insurance product, then I have no right of pushing that input to him, right? So that is essentially what the bill is talking about from a ongoing perspective, right? So I think that there is fair amount of clarity, and I think everybody will have to evolve and build that consent mechanism out, and there will be some amount, but see, it's a universal challenge. It's not a challenge for only one enterprise or another. It's true for a large bank, it's true for a small company, that's true for everyone, right? So essentially the industry will go through whatever, and this is not specific only to the fintech space, right? This is true for whether you are in gaming, whether you are in ad tech, whether you are in media. This is a problem across the board, right? So essentially this is a large problem, and this will get solved by the ecosystem at large, right? So this is again the way it is. I think the bigger question is what happens to customers who have already come to you, right? So for example, as a company, we've been around for the last decade, right? We have 20 million people who have come to us at some point of time in our journey, right? Now, is it possible for us to say that our last 10 years of journey don't matter and we are going to knock out our entire base and then start building again, right? That's not how any business can survive, right? I mean, essentially, we've made a lot of investment to get to where we have got to, right? So essentially, the point is what happens to that. And I don't think right now there is a very clear answer to that, even within the legal fraternity or even within the regulatory fraternity, right? I think that is a question which majority of the people are trying to find answers to, right? And we are hoping that when the guidelines or the bills become, I mean, or when it sort of goes into implementation, we will find answers to this question, right? Because think about it from this perspective that if today we have 20 billion people, right? IRCTC has 100 million people, or whatever, like. So essentially, you have not gone to IRCTC and said कि आप मेरे को credit card नहीं दिखा सकते हो, right? तो आप क्या मतलब, will you stop them from issuing their SBI credit card or whatever that they have, right? So essentially, I think those are questions that need to get answered. I wish I could, give you a, give you a sort of a sure shot answer to this question, but I think it's an evolving space. I think it's important for everybody who's interested in this to keep your ears to the ground, and try to gather as much information as you can. But the only saving grace is जो होगा वो सबके लिए ही होगा, ऐसा नहीं है कि आपके लिए अलग से कुछ होगा, right? So if it will impact industry, it will impact industry at large, right? So you can't say that, hey, I have this thing coming up in the future, so I will now, leave everything and start thinking about that all the time. That's not how it will be. So yeah, when it does come, I think we'll all have to find collective solutions for it.
Sure, thank you. And I'm just going to take up questions that came earlier and pause on the questions that have come in now. So while going digital encourages, yes.
Sorry. So Parth, I have one important question. I thought I will come in, like interject in between, and it's because of, like, this question will be important for all the audience as well. So we'll complete that question and then we go to the questions which audience have directly. Is that okay?
Yeah, sure, please.
Great. So Parth, you touched base upon one point, where like everybody would want to enter into origination like model. So I wanted to understand from you or your experience. You can highlight on some of the co-lending like models for like NBFCs which are there in lending space, or we can take your example as well, and how do you kind of you have a tie up with certain banks. So if you could help us understand all that ecosystem, uh,
Sure.
I think this will be a great learning for all the audience as
Yeah,
well.
I think there are two models that are existing today if you want to be in the lending space, right? One is an FLDG based model, the other one is a co-lending based model, right? FLDG essentially what it means is a first loan default guarantee, which you are essentially underwriting, and now I think a new regulation that guarantee has been capped at 5%, right? So you are essentially saying that hey, I am providing. So here you are providing only a sort of a guarantee, right? You are not providing the capital. The capital is being provided by the RE or sort of the balance sheet, right? Where essentially the loan is coming out of the balance sheet. Essentially coming out of the balance sheet, but you are providing like a guarantee or a sort of a up to 5% of loss is what comes to the fin or whatever. If it's a lending fintech, they would absorb the first 5% of the loss. Anything beyond that would go to the RE, right? So I think that is a pure origination sort of a model, right? Where you are kind of, so the reason why you put up that 5% is essentially for broadly two or three reasons. A, you want to test something out, right? Where there is no sort of clear data right now on, and it's an experimental sort of a program, right? And you are able to find a lender who's willing to go with that experiment, and you kind of lock in up to whatever risk up to 5%, right? So that's the first use case, right? The second use case is you don't have a balance sheet, right? So because essentially when you need to do co-lending, you need to get an NBFC license, right? And in today's parlance, getting a license from the RBI is not easy, right? So I will give you our own context. We got an NBFC license maybe 5 years back, right? And trust me, today it's far more difficult to get an NBFC license than it was 5 years back, right? They have increased the capital. So when we got a license, for example, the capital required or the net worth required was only 2 crores. Now if you would put a new application, you need a capital up to 10 crores, right? So that itself is a process of eliminating people who the regulator thinks are not going to be serious about this business, right? Because you're not going to put up 10 crores and wait for a year if you're not sure about doing an activity, right? So essentially, it's going to become far more difficult to get the license, and the scrutiny that the RBI is also today doing on NBFCs has increased manifold. I mean, I spent 2 decades in the industry, and I can tell you that it's the scrutiny is increasing because the size of the loan portfolio is growing, right? So essentially, if you think about it from a regulator perspective, see, in any business, right, first the business will get built and then the regulations will come. It will never be the other way around कि पहले regulation होगा और उसके बाद otherwise तो धंधा ही नहीं बनेगा ना. पहले तो आपको धंधा बनाना पड़ेगा फिर ही regulate होगा. So essentially, you would always have to understand that and that is the reason why businesses get impacted by regulation, right? So if you already know the regulations upfront, then you can choose to do something or not to do something, right? The problem that happens today is the fact that you have decided something to do in good faith, right? But the regulations change, and regulations change because of reasons that may be outside your control, right? So in that context, I would think that if one has the capability and the might to go out and get a regulated license, please go and do it, right? But also be sure about the fact that the probability of that getting that is decreasing by the day, right? Because there are various aspects that are evaluated today by the RBI before deciding whether to give you a license or not. And capital is not the only reason that is getting evaluated. So you can't say that, hey, I've gotten 500 crores of capital, you give me a license, right? Even then, the RBI may not give you the license, right? Because the RBI will make a decision based on whatever parameters they deem fit to make that decision, right? So I think co-lending, while it's a great model, but a lot of the limitation in co-lending for newer people is this is the license per se, right? FLDG is the other route which can be easily be taken. I think and REs are open to that. I think because now FLDG is also regulated, right? So if you were to have this discussion maybe a year and a half back, I would have said that there is still an anomaly around FLDG because it wasn't something that was regulated or recognized by the RBI. Now that the RBI has come up with clear guidelines on FLDG, I think it's easy to kind of put that structure in place. It doesn't cost you a lot of capital. I think 5% is a fair number to sort of go with. I would suggest that you first go down the FLDG route. Be very clear about the fact that your portfolio works, your models work, and then once you have some credibility, then go to the RBI, because it also becomes easy for you to put in your application and say that I've already tested this portfolio out. This is how it works. This is our profile. This is what we've been able to do successfully. It just makes your case stronger, right? So I would think that, of course, and also be open to getting regulated. I think sometimes what happens is that younger companies and smaller companies who are just starting out get very scared with regulation, right? Because nobody wants an oversight on what you're doing, etc. I think it's important for founders and for senior management in any sort of younger company to come with a mindset of being regulated. I think that's important. Once you kind of come with that mindset, you will be able to build. It's not that the regulation is done from a perspective of getting you to stop business, right? It is done from a point of view of improving the overall ecosystem. So I would suggest that there are, if one comes with the right intention, this is easily doable. But I think what happens is that because we've already built a business and we've not taken a regulatory sort of an oversight on that, then when it does come in, then it starts sort of impacting us negatively, and then we kind of become jittery around it, right? So I think I would say that, like I was talking about the cross-sell philosophy at the outset, I would also talk about it from that same perspective that, accept the fact that you are getting into a regulated space, right? And then build your framework around the fact that you will get regulated and be ready for regulations, because I think that's something that a lot of people miss out, right?
Great, thanks a lot, Parth. This helps everyone. So we have got 4 minutes. So Shivani, over to you for the remaining questions.
Yeah, I think we'll just have time to take up one, maybe two, and just disclaimer to the audience, not disclaimer really, a message. I will share Parth's LinkedIn profile with you. Feel free to reach out to him and,
But
share
incidentally,
your...
I am not on LinkedIn. Shivani will just share me. Maybe
Oh,
anybody wants to reach out to me, they can.
I'm so sorry. I don't know. Okay, I just assume everyone every day now is on LinkedIn.
Yeah, well, some people just sort of, I mean, anyway, it's a different story. I will probably take it out some other day.
Sure. Okay. Yeah, so I will just carry on with the question I was reciting earlier. While going digital encourages quicker disbursements, credit scoring, underwriting, etc., how can collections and delinquency be managed better? Parth.
Yeah, I mean, that's the holy grail question, right? So I think a lot of technology has to really come into collections. I personally am a great believer of the fact that, because you only see collection pressure. So I'll tell you why, right? So when you originate 100 loans, only 3 or 4 go bad, right? So origination technology comes first because you have to invest on all the 100 people and you have to build the tech to service 100 people, right? In collections, because only 4 loans are going to go bad, or that's what you would hope, right? You have to build technology for solving for that 4, right? So essentially the scale of technology intervention is much lower, right? As a fundamental, right? But the value of intervention is very high, right? Being able to solve that 4 customers will effectively impact you positively, far more proactively than being able to originate those 100 customers, right? So I think what is critical is really being able to invest in very robust technology from a collection standpoint. What I've seen is a lot of the collectors today are very, very under capacitized as far as technology based sort of investments are concerned, right? So I would think, and some of the automation pieces that I think we touched upon, while they're very critical on the onboarding journey, they're very, very critical on the on the collection journey, right? Because essentially this is a guy who has, for whatever reason, not decided to pay your loan, right? So you need to then kind of be able to reach out to him far more frequently, because you are essentially, the impact of that communication in monetary terms is far higher than the impact on being able to send somebody an origination message, right? So I would think that huge opportunity on collections. If there is any sort of organization out there which is trying to build collection sort of technology solutions, again, huge space, great opportunity. And also, see, lending is a cyclical business, right? In my own career, in two decades, I've seen three very strong cycles. I mean, 2.5 cycles, I would say. COVID was a half cycle, right? The early 2000s, we had the dot com bust. In 2008-9, we had the the Lehman crisis. And trust me, when things go bad, right? This is one business where you can wipe out your profits of a decade in 1 year, right? It has happened to large institutions. It's not happened to small institutions. It's happened to large institutions, which are 100-year-old institutions, right? If they have suffered during down cycles, trust me, one would even not know what hit them, right? This is one business where your shirt can come off your back. So the only way being able to manage that, and most of the people who've been in this business in the last 5-6 years, trust me, we've not seen any cycle in this business, right? Everything has been good. We are talking about very large growth in the digital lending space. We are talking about portfolios become bigger, everybody wanting to originate, right? More and more borrowers being interested in sort of taking credit products. Those are all positives. Like, life is unfortunately a roller coaster, and you will have cycles come sooner than later. So being able to invest in very robust technology solutions for collections, in my opinion, especially if you're in the lending side, I think it just like is paramount. I think while it is, and a lot of time it gets ignored because we are not spending enough time thinking about things going bad, right? We're always thinking about, hey, we can build a large portfolio, we can get more customers, right? But I think it's important because this is very, very critical. And invest in strong tech, invest in strong automation tools, chart out what to do with a customer who's delinquent, because the treatment of that customer has to be very different than a customer who's just looking for a loan, right? So essentially all of that has to be thought out, and a lot of this journey has to be automated. So I would think that at the outset, just be sort of sort of invest as much time and energy you can on this particular aspect.
Thank you so much. I think we can write a whole ebook on Parth's wisdom on lending. And we are going to create smaller snippets of what you shared, Parth, along with Vineet, and share it on social media. Unfortunately, if you're not there, we'll try to find a way to reach you.
I'm on no social media, right? No
You're
Instagram.
one of those people. Okay.
Yeah.
We will send our notes across to you over email, the old school method. Yeah.
Thanks, Shivani. Thank you.
Okay. Thank you so much, Parth. Thank you so much, Vineet, for your time. And thanks so much, Preksha, for organizing this webinar, and to a lovely and enthusiastic audience. Thank you so much. Have a good weekend
Thanks.
and week. Bye.
Thanks a lot, everyone. Thank you. Thanks, Parth.
Thank you.
Bye-bye.